Good evening, ladies and gentlemen. This is Clueless Trading Frank. It is approximately 8:14 p.m. New York time, fashionably late. Not intentionally. Do apologize for the slight delay. This is a free market and stock update webinar. Important for all members and traders to navigate these financial markets on a daily and weekly and monthly basis. This session will be recorded and uploaded to the Clueless Trading YouTube channel. Highly encourage all of you to recommend the Clueless Trading YouTube channel to all your friends and anyone else who might be interested in finding out why we do what we do and why we do it better than most people out there. Saying all that, this videocast or webinar is purely for financial education and not for any solicitation or advice, and we shall begin. So we'll take a quick make sure that everyone has audio and visual connection. We have Dano, we have Mike, we have PB, we have Trent, we have my good friend Swimming the Market, and whoever wants to join us at any given time. So try to keep this within 60 minutes so that everyone gets some sleep tonight. It's been a long day. Seems like a very long day. So first of all, we're going to scan through a bunch of market charts like we normally do. These are critical and essential to keep an eye on the broader perspective, so you can manage your trades better. Then we're going to go ahead and look at a bunch of charts on individual stocks, and of course, any questions and anyone who wants to look at any particular company, I'll be more than happy to look at them and give my 2 cents on what's going on and what we see. So that's going to be tonight's agenda. So saying all that, what we're seeing behind us is our and again, these are continuing extensions of previous charts that have been put out there for many weeks, many months and years, and you can see what's going on. So this is not something out of the blue that just appeared in front of you. These are things you guys have seen before many times, both in these free market webinars, in advanced coaching sessions, and also during real-time postings on the private Twitter feed. So we have the S&P 500 futures here. Quick glance tells us we are on a sharp uptrend. We are resting here on channel number 2, if you want to call it that. It's not quite the mid channel, and you can see here that it is the uptrend overall is very much intact, and this is what I've been saying for a while now. We have had quick, sharp dips multiple times. The most recent one that we saw, where we lost a good about 200 Dow points, this particular move, and that was from, you can see the date right here at the bottom, just to remind ourselves, that was from the 5th of December to the 6th of December. Wow, that's a long time. 24 hours. That's pretty much what the markets are doing, right? We have quick, sharp, corrective pullbacks. They last a couple of hours, if not a day or so, and then bang, the market moves higher. That's the nature of the beast of a bull market. Things will change. Things always change. Nothing stays constant. The only constant in financial markets, just like in life, is change. So as long as you guys accept that, you're going to be fine. Is it easy? Nope. Is it terribly hard? No. But at the same time, that's the nature of volatility. So looking at the dates here, we are looking at, this was the last Tuesday, Wednesday correction right there, right? And then you can see the pattern. We called it very correctly. As you know, I called it a dragon bullish formation. Well, that's pretty much what it was. You can draw it like that. Okay, and along the way, little zigzags, and bottom line is we broke out today. We broke out, let me see here. This was This is the breakout line. Always look at the last reference point. We're not going all the way back. We're just looking at a recent reference point. We can see here that this is the breakout level right there. And that breakout was on the 8th. So that was last, that was last Friday. So last Friday was, there you go. And one second, 12/8. Yeah, so last Friday. Okay, that continuation pattern right there, and this is where we are right now. Futures are up about a point right now. After hours, not much going on. I did notice over the weekend, because it's always very tricky to see how futures open on Sunday. It was a very eventful weekend because of Bitcoin, the launch of the futures on the Chicago Board of Options Exchange. So that's a huge event. So I was watching very carefully to see and what the equity futures would do, Globex futures, and I saw that it was very calm. Because one of the things I don't particularly like, I shouldn't say I don't like, if you're quite long and futures open up 5-10 points, you hit the jackpot right off the bat in the morning. But generally, you want a flattish to slightly higher opening, no major gap ups and stuff. So you can, if you're not positioned heavily over the weekend, then you have time to get into things, right? So that's the best. That's one of the best ways to one of the best scenarios. The other best scenario is optimal scenario is futures open down slightly, let's say 5 or 6, 7 points, and then the market moves. And those are very optimal because we catch the reversal, which we have done consistently, as you know, and then you tend to do well as the day progresses. If futures open up too much and everything is up there, you know what happens within the first hour. They come down, bang the market, the algos come in really strong, whip things around, prices move around like they're on crack, or monkeys on a hot tin roof, and then it's difficult to position yourself. I'm sure you guys as active traders or even non-active traders and swing traders, you understand what I'm talking about. So I like it when futures are behaving decently. Up 1, 2, 3 points, that's great. So you don't have a erratic, irrational situation developing first thing in the morning. I hope you guys are understanding what I'm talking about because that's a reality of what we do. So at this point in time, there's really not much to say. We are in this band now. The upper end of the channel is I can draw one more line here. 1 second. I'm trying to draw one that makes some tactical sense instead of just randomly drawing one. So this one seems to have a couple of points of contact, which trying to find. Yeah, which I can live with. So at this point, if you're looking at 2670, 71 on the E-minis, that's roughly 2676, right? Or so, or 2674 on the cash settlement on the SPX. So you're talking about we closed at 2660 roughly today, and the high of the day today was 2665, which I called last week. So this little cheap 2665 calls and 2660s, did extremely well. They didn't go like 300% up, but they were up 60, 70% from where we called it last week. Overall, the 2670s even were up 33%, and the 2700 calls, which I had mentioned today and I had mentioned last week too, just as a flyer if you want to get them, they were up about 25%. That's not bad. That's 2700 SPX, guys. Okay, so even they have a lot of delta and gamma and theta and all kinds of good, option Greeks in there. The volatility, the implied volatility, they even went up 25%. So it just shows that there's juice in this market. There's no question about it. Now, saying all that, this is where we are. This is level of resistance here, 2667. On it, for tactical traders. And on the upper end of the scale, we're looking at 2670. So keep an eye on this. I'll be using this chart going forward into for this particular week, because this is a good chart to trade off if you're trading SPXs. Okay. Any quick questions on this one? No? It's pretty simple. We're looking at the stows here, which just popped up, and the stows here, this is a 15-minute chart. So for traders, the stows here are just standard. It's good. There's nothing to it. Let's move on to any questions while I'm switching over to another chart.
No, that was really clear.
Okay, that's cool. 1 second. All these things are popping up on my other screens. I'm trying to shut them down. Hold on. All right. Let's drop another chart here. Let's look at the NASDAQ. Now, the NASDAQ, if you notice, has a completely different structure, And, of course, this timeline goes back a bit. This is the 29th of, you're looking at the last major reference point before we had that, big flash crash on the NASDAQ. We had a couple of them, right? And the world was going to end, and Amazon was never going to go higher, and Tesla will never recover, and all that garbage that you hear in the media and other trading forums and stock twits and other places, because they're all going by prices. As I like to keep on reminding people, if you go by prices, you're not going to get anywhere in this market. You have to correlate. You have to basically use these tactical charts and then make sense of why the prices are doing what they're doing. And I think a lot of you are really coming around to it, which I'm very proud of. And it makes my job easier, because I keep on harping on and on. But that's the job of somebody who is who's quote unquote a trading coach, is and this is how I teach myself. You can't keep on freaking out every time a fast moving stock drops 3 points or rises 5 points. You got to keep an eye on the tactical formations. So that gives you a beautiful overview of how and what you need to do. Always remember, technical analysis and tactical structures, the way I draw it, it's not a perfect science. It's more like art. So there's a lot of accuracy to it. The structures that I draw on top of this, these candles. And so this gives you it gives you a, for a better choice of words, and that is the correct word to use, it gives you a very precise roadmap. And this is your roadmap. A roadmap is going to be it's going to be volatile. Things are going to go up and down, but just the way many of you were when you first joined me, very much stuck to the old ways of thinking. Some of you guys still are. I don't think anyone here, but there are people out there within our group who just refuse to change their way of thinking. Is that the volatility part of the market is constant, and so you got to use. What I was going to say was, many of you have become far more focused in quickly looking at the charts. Trying to understand them. Many of you have joined the advanced coaching sessions, which are terrific. And I encourage many of you who haven't to do it. You're going to do a heck of a lot better in your trades, that I can assure you, and lose less money. Remember, this is a serious bull market, but very few people are making money. It's a fact. It's a fact, because now the markets are very bifurcated. The individual stocks are very selective, and the volatility is throwing a lot of retail traders off the boat into the water, and then the market takes off. I don't need to remind you guys on that, because without these precision charts and the guidance that you're getting through say trading private, the tactical charts, the alerts, the comments, I can assure you that the majority of you would be lost. Like babes in the woods, lost. Okay, so I'm glad that you guys are with us, and that some of you are, and many of you are benefiting from what I'm producing and delivering. And you need to spread the word out there. That's the reason why I ask people to give some big shout outs And you know, if you feel like, write a quick testimonial. That's our organic marketing. Many of you don't. It's okay. I'm not going to hold it against you. Obviously, we're not kids here, but it's nice when people give us big shout outs, because that's how we get the word out there and get some referrals. Let's move on. So this is your NASDAQ. You can see what's happening. Nothing here to explain. Here's your broad, wide channel the NASDAQ's traveling in. Nobody thought the NASDAQ could get back to previous highs. Well, it did. It did today. Does that mean every single NASDAQ stock did? Nope. It's a very selective market. Certain stocks pick up. The hedge funds drive them, pedal to the metal. Apple wakes up all of a sudden and then just runs like no one's business, up 2%. That alone drives the market, the Dow, the NASDAQ, back towards the highs. The Dow's making new highs. So nothing here to explain, really. You know, get used to this. Just look at it, and it's normal. This is the normal pattern of daily markets. And this is going back to the beginning of end of November. And you can see the patterns. Again, very large inverse head and shoulder, double bottom, all posted, all directed, all predicted prior to this happening. Go back and take some time, review through my real-time Twitter feed, and you will see that all this was forecasted to a high degree of accuracy. There are no guarantees, to a high degree of accuracy last week when things were falling apart. So, does this mean we continue to go higher and higher? Nope, doesn't mean that. It simply is giving you a guideline here that if we make, we are approaching the upper end of this channel. Will there be a big bullish candle breakout? It sure can. It sure can. It's a holiday season. There's a lot of momentum on the market. This is monthly options expiration on Friday, the 15th. And we can ease back the first part of next week and then move, and then rush ahead towards Christmas. And I think that's what's going to happen. So we could move up this way, pull back, test this level, pull back, fall to the lower end of the channel, make a move. That's the way. Tactical bull markets should work. Bull markets shouldn't be like this, because when they're like that, a straight line up with no volatility, they generally tend to, have very sharp, nasty corrections, which no one enjoys. And they just suddenly come. They could come in the middle of the night. Boom, futures down, 20 points. NASDAQ futures down 40. And it's no fun. Even if you have a small position, it doesn't feel great to wake up in the morning, right? You wake up in the morning with a big smile. Oh boy, I'm down 60%. Wow. I'm going to make money today. Yeah, generally we do, because we cost average down, but it's not a good feeling. Let's face facts. So instead of having these type of parabolic moves, I will settle with this type of nice uptrend channel type of moves. I said, this minor thing here looks like a bull flag, which looks like it wants to bust a move and make a new high. Red arrows are here, which means the sell programs are going to come in here, and we shall see. Now, one of the reasons, just so you all understand, as I move on to the next chart. Any quick questions on this one? No, we're good. NASDAQ, NQ, NASDAQ, NQ futures. Any questions, anyone? Okay. Another thing, what's going on is there's a substantial short position still in the market, believe it or not. There's a bunch of institutional traders and hedge funds which are still, they're just stubbornly short. And when you're stubbornly short, you tend to get blasted, and the market doesn't come down. So So that's one of the reasons too, a purely technical reason. It's not a fundamental reason, a technical reason why it's tough, why the market keeps on grinding higher. Okay. Now, if the shorts if the shorts were not this stubborn, trust me, you would have more of a chance to short the market and make yourself, 100%, 80% on the short side on a quick move down. But it's just tough to do that. Tough to do that because way too many stubborn shorts out there, and they're covering every time the market's coming down a bit because they're losing the short. When it's coming to the end of the year, bonus time for a lot of financial institutions, Wall Street and beyond, and they want to keep, they want to get their bonuses. They're not going to, shoot themselves in the foot and sell everything and take a loss for their client portfolios, and they want to get paid. The tax reasons involved too. Okay, so it's not that hard to understand. You know what I'm saying? So here's your Russell. The Russell's having a little bit of a tough time after making this substantial move, which we caught. And then we have the consolidation channel. We had one nice reversal candle here. That was on the 7th, which was Thursday, I believe. Friday. So there's really nothing majorly wrong here. It seems. Look, this is the daily chart. So it's more of a swing. It's a swing view. So for people who play the RUT and the IWM, the way you look at this very simply is we are resetting. If it comes down here, then that's a screaming buy at those levels, and it starts to turn. That means there'll be a retest of the 1518 level, and that very well could complete the reset and the W pattern formation. There's really nothing really wrong with the Russell. At this point, I would be a aggressive buyer at this gap level, which we did, right? When it went up a good solid 15 points right there. I would be an aggressive buyer of the RUT at around 1503, 1507, right? This band here, you can visually see it, the gap fill. If it creates a W pattern, then it's going to basically bust a move. First level of major resistance comes into play, standard procedure right there at 1540. So you could pick yourself, even from this point, that's 20 points. If it does pull back to if it does pull back to, let's say, the upper end of the gap, which is 1508, that's 32 points. And if the Russell really wants to take off, then you're going to basically get up here to the 1560 level, which I had shown well before anyone could imagine. I'll take full 100% credit for that. The rising wedge, and I drew this line. You remember that back then? And it hit exactly that level. I mean, this is it. You can't make these things up, and that's the reason why charts don't lie. All right. And as a quant chartist, I can say whatever I want, but my charts will tell the story, and I can't make up a I can't make up a long-winded story because my charts are right there. You'll say, hey, look at the chart. This is what you said. This is what happened. If it didn't happen, I can't say anything. I say it didn't happen. All right. So right there, it hit that. Boom. Rejected right at that level. So now, like I explained it to you, this would most probably either it's a minor consolidation, 2 days, and then it decides to make a move, or it pulls back here, and which that's why we have to be patient to see what happens. That's why if you notice, I haven't had any big calls on the Russell 2000 in the past couple of days because I'm watching this. There's no rush to just get into things for the sake of getting into. It has to set it up. Like they said in Karate Kid, right? Patience, grasshopper. So sometimes just be patient. There's a lot of other things going on. Play those. So if it pulls back here, then you'll get this. If it breaks down here, you can short very nicely because that means the Russell's in real trouble. That means the market's in trouble. and that will basically bring it down. We could short this for a good 20 to 30 points if it breaks this level. Okay, it can happen. It can happen. So that's it by the Russell 2000. So we covered 3 of the major indices, and now we're going to quickly look at some longer term. 1 second, bear with me. Of the Nasdaq, of the market on Thinkorswim. And this is a very technical chart, very easy to read. Look what we're doing. It really looks like the market wants to get to 2683. Remember, this is the SPX, no minis, nothing, no conversion needed. But you can put your brain to rest. Okay, you don't have to add or subtract or do any kinds of funky stuff. So this was the previous high. Let's just actually move it up a little bit. Let's recalibrate this right there. For SPX players, this chart is gold. Up or down, it's all there. Here's your 20-day moving average. Here's your 34. Here's your 50. They're just flowing upstream. You can see that. There's not a single hint yet of any type of technical damage. Doesn't matter how much you squint your eyes and you tell your brain, no, this market can't go higher, and listen to the bears or whatever, people do. There's nothing here technically which says that we are going to basically fall apart. So 2664, the previous high on the market was 2665, and we're good at getting there. We're getting there. Okay, you can see that. We'll probably kiss that tomorrow. Now, so this is very simple. When I post this, take a look at it. That the only thing is that once it deviates too much, I've talked about this before, standard procedure, away, or the distance traveled from the 20, from the 34, from the 50, you're looking at standard deviation. How much you're veering away from the mean. Like I explained in simple analogy, you're driving along the highway. Here's your car. Let me see if I can draw a car. That's Tesla's Model 9. How about that? Okay, that's the battery pack in the back. So here's your car. So if you veer too much away from the highway, you try to steer back into the highway, right? So that's called reversion to the mean. So if you have the reversion to the mean, then you move away too much. You come down towards the highway. You try to stick within the highway, okay, which are these channels. So that's what, if we move up a little bit too fast, then you can rest assured we're going to get a reset. It's going to be fast. It's going to be quick. The highways are still trending higher. You can see that. This dotted channel is your acceleration channel. This is the broader channels in the market. 2,700. I believe it happens by Christmas. Or minimum upper end of the acceleration channel, which we once hit on the 5th of October, right there, upper end of acceleration channel. We almost hit it on end of October. This was beginning of October. We almost hit it on the 4th of December last week. And we will attempt to hit it again at around the 2680, 2684 level, because it normally doesn't hit it exactly. So give it a little room here. So let's say 26, let's call it 2678. So you got another 12 more points on the S&P 500. 12 times 6, you're looking about 72 more points on the Dow. Can be done as early as tomorrow or this week as we get into monthly options expiration on Friday. So SPX players, there's your roadmap, as precise as you can get. Candle studies are showing us we have expansion. 1, 2, 3, 4 days of expansion. 5th day brings us most probably to back retesting the highs. Generally, we get sell programs at the highs. So the other scenario could be and somebody can step in and tell me, you basically have a cup, you create a handle, we come back, pull back a bunch of points, nothing crazy, as long as we stay within the acceleration channel, which is on the lower end is 2630. 2630, remember 2630 from here is a good solid 180 Dow points. Nothing to freak out about, guys. Technical resets. You just shouldn't be sitting around letting everything drop. You need to get out, buy some of those SPX puts. I'll be on full time, as I normally am on a real time basis. I'll be putting out the alerts. But one of the things I want to impress upon a lot of you, and many of you are doing it, and I'm very proud of that, and I wanted to say this, is I provide some extremely powerful tools to tackle these markets, to navigate and minimize your losses and maximize your profits. You don't have to wait for every single time I'm saying something. I'm there on real time, but that doesn't mean that you're going to get a tactical alert on everything that's going on every 5 minutes. So what I'm really proud of, and I'm going to mention people like Trent, for example, okay, who do have independent ideas that they're working with. Because I'm not a ditto, you're not in a ditto trading service that you're matching everything I'm doing. I'm doing a bunch of other small stuff on the side that I don't even post. So people like Trent, for example, just picking one example, there are a few others too, who are independently trading the Disneys, and he mentioned Boeing and Fox, which I traded for a bit. Then I kind of got bored. Shouldn't be, because it's doing well. I'll revisit it again. So you should do that. Use my tools. Look at the structures I'm putting through. Request a chart when I have time. I'll put that up within a couple of minutes, as I always do. And go with some of your independent ideas. That's why you are. We are free to do what we want, right? And then pick up a couple of my monster killer momentum ideas and swing ideas and distress sale ideas that we buy, and run with it too. But you don't have to buy everything. You don't okay, I'm just buying what TSLA Trading's putting through, and I'll just leave my independent thought aside. No. All right. So I'm very, very proud of that, and I wanted to give a shout out to people who are doing it, and some of you are suggesting ideas, which are doing great. Our member Bob, who pops in once in a while, he gave us Overstock. Wasn't doing well at all on Friday. Sold 60% position on Friday. Kept the 40%. Went through the roof. Jumped in again today. Went through the roof. Right? Overstock, OSTK. So, again, he comes up with independent ideas he puts out there. So you can always suggest you put your ideas, put it in the trading room so others can see. And don't come in after the fact like some people do. All right? Come in before the fact. Or if it's after the fact, don't mention it, because it doesn't serve any purpose whatsoever. How would somebody like if I came through every day and just told you after I sold something, whoop, just made 250% on that trade. So none of that fake stuff, okay? We're not into the fake trading BS here at TSLA Trading. We're in the real trading business. All right? So if you want to put a trade out there, other people to see and participate, then just put it in the trading room before the fact, or close to after you did it. Don't come in after the fact. It doesn't serve any purpose whatsoever. Okay. So right there. So pretty clean. Let's take a look at and this is a daily. This is a daily. So it cuts out all the noise of the intraday stuff and everything. This is looking good. Even stochastics have patterns, right? So ready to go. So once we get overbought, back in this zone of back in this upper zone of 94 to 100, the market's overbought, and there's going to be a short-term reset. On the daily, when it gets overbought like that, we generally have 2 to 3 days of pullbacks, or at least 2 days of pullbacks. If we get this overbought and get up to about 95, 90, 100 on the full stochastics. So again, I'll be showing this, the daily, maybe once or twice a day, and you track it on your screen. But this is a pretty clean shot of what's going on. only negative is that we are deviating away from the moving averages rather rapidly. That means there's a minor reset coming. And that reset will come on Wednesday. Can anyone tell me, other side from the fact that Wednesdays are generally a reset day where markets pull back, options reset before the run up into Friday? What else is happening on Wednesday?
Fed announcement.
Okay, please. Somebody just mute their microphone. That was a lot of noise. Either the toilet broke or maybe there was a flash flood or something. That was a lot of noise. Thank you. It's a Fed announcement. Fed announcement on what?
Interest rates.
That's right. So just Fed announcement is a good answer, but it doesn't tell us anything. So yes, it's a very, very critical meeting. The December rate hike. Markets are going to, they're going to pull back. And what happens on Fed Day? We generally get a three-wave move. Up, wave one, up or down, wave two, wave three. Generally, whichever one is wave one, that happens immediately after the Fed announces a rate hike or non-rate hike or whatever they do. Well, that's the only thing. Is they going to raise rates or not raise rates? But then the comment section comes. And this is Janet Yellen's last appearance as the Federal Reserve Governor. And Jerome Powell, another fine gentleman, is going to be taking over in January. Yellen has done a phenomenal job. God bless her. She's taken a lot of heat from different people, and she has always kept it cool. I call her. She's Ma Baker from Brooklyn. Okay, don't mess with her because she will flatten you. She's smart. She's tough. And she's done a good job under difficult circumstances. Even Donald Trump, President Trump, respects her. And he doesn't respect too many people, does he? Right? So, great lady. Good for her. Great job done. So, Jerome Powell, nominated by Trump, is a great, fine gentleman. And he's going to lead the Federal Reserve, and I'm sure he's going to do a terrific job because he's not a political fanatic, and he's very practical. He's been with the Fed before, and he knows what's going on. So, that's it. So, Wednesday's coming. So, by tomorrow, you want to start taking down some positions. Sit back, chill. All right, because if things go whatever, things go hairy, we could get that quick dip on Wednesday. Okay, after retesting the highs tomorrow, which I think will happen, high probability. A quick retest down to first move down here is going to be. I'm going to move this down. Let's say we come to the lower end of this dotted line, which is acceleration channel. That's 2630, guys. That's 200 points, fast. You don't want to be giving back all your nice, beautiful profits. I don't care what you're sitting on. Okay? Back to the algos, back to Mr. Market, just because we're having a reset. It's no fun. Makes your life miserable when you're up on something and then you give back everything for no fault of yours. Sometimes many faults of yours. So this is a fair warning that Wednesday is going to be very volatile. And Tuesday is the day, drop a lot, take some money down. Take a bunch of money down. Not asking you guys to just dump everything. Oh, let's get out of stocks, we'll get back. On Wednesday, it's never that easy. Because Wednesday might be one moonshot up, and we basically get up to 2686, which is a high probability trade. But there will be that wave 1, wave 2, wave 3 volatility. So generally wave 1 is wave 3. That means right after what happens within the first 15 minutes after the Fed releases their comments, their communique, will generally be, so if it's this, so Fed day, and I've seen this happen, and it happens very fast. So Fed day, so wave 1 equals is basically a 3-wave move. Okay. So wave 1 is wave 3. So if wave 1 is up, then the wave 3 will be up. So let's say the Fed releases, thing, market shoots up. Everyone's like, yeah, boom, you want to sell. You want to sell because right there'll be big sell programs. That'll be wave 2. Okay, they're gonna blast out stops. It's gonna feel like, oh god, that's exactly. If you want to see the real like classic lemming reaction, just go on to StockTwits and other trading forums. You know, it's like they have no idea. Like, oh my god, this market's just what happened there? What happened? Well, nothing happened because right after wave 2 comes wave 3. And wave 1 is generally high probability, high correlation is wave 3. Once you hit wave 3 and let's say you bought into you took out some nice profits the day before, or you played the intraday stuff, then you want to be buying here. And by the end of the day, if you're doing the SPX and some fast moving trades, you want to be taking down some nice money because Thursday starts another cycle. So Thursday could open down, and it generally does. If the day ends up higher on Fed day, which is Wednesday, then Thursday will open down, guys. Okay? And then you pick up. And Friday is options expiration. Now, people who are really active and not fake traders, they know what happens. Options expiration monthly is a bullish event, not for the whole day, for the first part of Friday. So till about Friday, let's say from the open to maybe 11 a.m., markets will be up. And then after that comes heavy duty robotic black box, algorithmic high frequency trading, robotic programs, which are going to slice and dice you if you did not take your options, especially the weekly options, take the profits by the first part of the morning. Pinning the strike is a very ugly game if you're sitting there hoping. I don't need to remind you guys. If you intentionally keep on hoping, you deserve to lose money. If you lose money after doing all the tactical disciplinary work, then it's okay. You have a right to feel bad, but not to slap yourself. But if you intentionally keep on doing the stupid price watching, hoping game, not watching the charts, not listening to what I'm telling you right now, you deserve to lose money. End of story. I'm not here to pander to your bad habits or my bad habits. I am here to correct them. So don't expect sweet talk, guys. All right? Because so many times, many of you intentionally have put yourself in a state of misery because you refuse to be tactical. Don't keep on doing that. It is very harmful for your mental health. That was good, guys, right? All right. You know exactly what I'm saying. So all kidding aside. So Friday, for the first part of Friday or so, it's great. So basically, if we get a pullback on the Thursday morning one, so you got two tactical moves here. Wave 2 from the wave 2 sell off after the spike up after the Fed, let's say, which I think will happen. I think the Fed will raise quarter of a percentage point and mention some great things that's happening in the U.S. and the global economy. Strong job growth, some wage growth, strong credit growth, consumer credit and stuff like that, which is what you need, the fuel that propels consumer spending. So you got one wave here. You got a second wave. I'm looking at the long side here. Okay, you can short this. And I'll be very I'll put out some, but you don't need to go crazy short because this wave 2 is going to be very fast. Very fast. You've seen that before. So if you think, oh, I'm just going to short it, take a nice long walk, sing a song as I'm walking along, pick some flowers for whoever, then you're going to be finished. You're going to be focused on the screen. Or put some limits out there so you get taken out if it hits that. And then, so you got one big move here. So this is the short one. This is the long one. This will come from mid-afternoon, 2 p.m. So it's going to happen somewhere between 2:30 and 3. And then from 3 to 4, you could get this. Take down nice profits at the close. Thursday, you can put out, I mean, this is all predictive forecasting. Generally, I've been pretty right about it, but it might not happen exactly as I'm saying, but I think it's going to be exactly this. And then Thursday, if you get that morning pullback, then you want to buy that, ride it up into the early part of Friday, call it a week, walk away from the screens. Does everyone get it?
Yes.
I mean, I couldn't be any more clearer, guys. Seriously, unless I'm speaking like Swahili or Chinese or something. I mean, this is like as predictive analytics as you can get anywhere. Anywhere. I'll go head to head with the biggest strategists out there, people that I respect and listen to, and I don't think they could even give you a road. I mean, literally blow by blow plan of attack. Between now and Friday. All right, now. What we're going to do now is, so we're good with this, and there's nothing to see. Let me just quickly show you guys my good friend Swimming the Market's favorite chart, which is the Swing 533, and that had mixed signals last week. So let's see where we are now. Here we go. The world premiere of the Swing 533. My good friend Swimming the Market, and I should give you a lesson on this. But let me just tell you, this is what bull markets do. All right. So this is when the histogram start to come down. Generally speaking, they go negative a little bit. In a bull market, and what we are going through right now, it's not just a bull market. It's been a majority are still playing defense. I'm going to stick by that. Majority of traders, institutional as well as retail, the lemmings, as I call them, they're playing defense, and they're like either selling too early, or they're trying to short, or do all kinds of stupid stuff. No, markets can go higher. No, nothing can go higher. Bitcoin's going to go to 2,000. Like, everything's wrong. Trump is going to get impeached. Garbage. All garbage. Okay? Because because of that, the floor on every pullback is very shallow. Very shallow. Because why? It's a normal trading reason. Because the shorts are covering very quickly. They're realizing that too much strength. So generally, it would have gone negative. We had one day. Let me take this stupidness. There you go. That's cleaner. So you were coming down here. Now we have created a double bottom on the stoves. Whoa. If I was a hardcore dogmatic short, I'd be pretty scared right now. We have a double bottom on the stoves on the Swing 533. Okay? My ACS students know exactly what I'm talking about. So instead of these histograms, which are powerful, this is a MACD histograms, instead of momentum going negative, it just turned around and now moving higher. The bars are expanding for the third day. That's pretty. That's impressive. Gotta respect it. I don't care what we think. I don't care whether you get a 30-point dip in the middle of the market or a 60-point. This is serious. So what this is basically telling us, we're going to make a new high on the S&P 500. When you got this spinning top, I called it. Okay? And it corrected. I'm watching these lines till Friday. This just crossed over, by the way. This crossover happened on the 7th, 8th. This happened on Friday, actually. This crossover. Okay? So basically, we're on the second day of the crossover. Expansion candles. These are billions of dollars of short decimation. Not fun. Each of these candles are billions of dollars of shorts getting fried. These are a couple of $1 billion of longs getting fried. Remember, charts are not just little candles and nice colors and stuff, right? Charts are money flows. They're showing you money in the form of patterns. That's the way you got to think about it. So, very simple. Crossover intact. Crossover intact. We generally get more than 3 days of a run up. That's why I'm saying we have a good shot to get to that 2680 plus level, if not 2700. Will it be this week? I don't think so. 2700 is 40 points. Will we get 240 points between now and Friday? Hey, it can happen. Believe me, it can happen. But I would say 2680 or so, one thing at a time. Now, in the meantime, the RSI, which was deep oversold, has now, within a matter of 48 hours, 72 hours, has now got straight up again into deep overbought. Back towards the 90. Back towards the 90 with a crossover intact, with the histograms expanding, telling us that it will most probably go sideways for another couple of days, which brings us into monthly options expiration. See how everything kind of fits? Are you guys getting this? Are you guys getting it?
I am, but
Yeah, I mean, I know even people like Nick who are not very tactically focused, but are picking up very quickly, are definitely understanding, because I'm explaining this in very, very simple terms. Okay, so bottom line is, this is not a trading chart. This is a predictive swing forecast, and I use this as one of my tools. It's known as the Swing 533, named after the great historian 533. No, I'm just kidding. All right, named after the stochastics, the percentage K and percentage D, the 533. So this reading so far, as I can see, is telling us we got a couple more days, and then I just explained everything before. I'm not going to repeat it. So we're good to go. This is good. As long as this crossover is intact, it's going to get overbought again and back to the game. Back to the pullbacks again. Get up here, create a handle, which is basically the consolidation channel. Either breaks out or breaks down, creates a back to the 2630 level, which was a screaming buy, right? So a W pattern again. That's the way it goes. So that's it. Now, very quickly, it's what time is it? It's 9:08. We started a little past 8. I'm going to be more than happy to look at a bunch of charts. The first one that I had on before, ULTA. We're long ULTA. We're down on ULTA today. And let me explain to you why it's not the end of the world. Number one, real simple. The volume was light. Look at the buy volumes on the upside. This volume was on the lightish side. Okay, no question about it. Second, it is undoubtedly, this is definitely a megaphone pattern, so that's intact. Undoubtedly, there was a seller here wanting to get out of ULTA, and institutional seller, so that's why we had this candle. Now, have we seen these type of candles before within this upswing? Absolutely, we have. 1, 2, well, that was the big candle down. Okay, so 1, 2, 3. These are the 3 similar ones that I can identify right now. Right there, right there, right there. Now, what is positive? What's positive is the 20-day, this is a daily, so this is a swing play. This week, next week, going into the latter part of December. I mean, going into January. Just like AutoZone, dips 8 points, 9 points, but boy, did it run, right? Exactly, from 492, 495 up to 760. I mean, 720 plus. So the 20-day moving average is still creeping higher. We are about to get something here which we don't know yet. We need a nice fat reversal candle. When all of you lovely ladies, or maybe some of you gentlemen, run out to Ulta Beauty and buy some fantastic mascara and whatever else they fantastic products that they sell there, and make yourselves and your partners happy and your wives happy, husbands. None of our dogs or cats wear mascara, which is a good thing. So bottom line is, once you do that, you got this big fat candle. We are still, and then that should create a crossover of the 34 and the 50 moving average. Once that happens, you want to stick with this trade for the next couple of weeks. Once that happens, is it about to happen? Looks like it. If it falls like this, with the 50 and the 34 curve down, no good. So people can shout and scream, yes, it's going to go up, it's going to go up, it's going to go up. But sorry, at that point, I'll take my loss, go, see you later, or short it. Won't probably short it too much because the stock is pretty heavily shorted. Does everyone understand the trade mechanics, what I just explained on Ulta Beauty?
Yes.
Actually,
Yes.
if anyone doesn't understand, say, hey, I didn't understand anything you said. Well, I'm basically going to say, well, you're not supposed to understand it because I'm clueless. So, Mike just informed us on breaking news. Mike's lovely daughters are in New York City. So he said, my daughter rides the same subway line as Janet Yellen. That is breaking news. Good for you, man. No, seriously. No, that is good. I mean, Mike has very smart daughters. I know Mike personally. He's a great guy. So Janet Yellen still rides her bike. And then, no, she takes the subway. Abby, what was her name? The famous Goldman Sachs strategist? Abby Joseph Cohen. She rode her bike. What happened to her? I never see her. She still looks the same. I saw her once, like on TV. I think she was on like a couple of weeks ago. She used to be in there a lot, right? Abby Joseph Cohen said this. She was wrong a lot too. So I think they put her away.
She made one right call.
Yeah, I know. No, she made a couple of good calls. But she, but then, like I said, it's these people. She's very smart. She rides a bike a lot. Anyway, remember one thing about markets. You can't be right all the time. If you're overall right on the general direction, you're a genius. If you're wrong all the time and making like all kinds of stupid things because of your emotional stuff, which most retail traders do, but if from an analyst who does that, that's it. That should be the cause for a massive firing. Okay, what are the charts does anyone want to look at? Trent, you wanted me to look at what? Disney or Fox?
Well, the Fox was just the rumor on the buyout that I kind of posted.
I know that. I mean, we know that story from a while ago. This Fox chart is sick. Okay, my point is the reason I'm not really pushing it. This is just me, because the stock's gone up beautifully, and we played it nicely too earlier, if you remember, 2 weeks ago. When the initial rumor started, is the fact that it is already known. Generally speaking, this is just my theory. Okay, generally by the time everybody knows the same story, it's kind of like a Qualcomm thing. It doesn't do anything. So that's just my theory. You know what I'm saying? It's just like everybody knows Fox is going to. But there was news tonight. You heard that. Comcast is basically pulling out. So Disney is now kind of like the only bidder left, which is a good thing. But there's not going to be competitive bids for Fox. So the daily chart is fantastic. We're going to look at the weekly. The weekly basically is telling us that right there, we are at that 33.61 level, upper end of the range. Is 34.79. This is a great lotto play. Options are pretty cheap, like they used to, right, Trent?
Yes.
Yes, the options are cheap. You can buy a bunch of them, wait for the buyout. But what premiums built in on the buyout? Whether it's a complete cash takeover, which I doubt it, it's probably going to be cash and stock. You'll notice, just be careful, you'll notice it won't zoom higher exactly. Let's say they buy them out at 36, it's going to be stuck at 35. Or 35, and you wonder why they're buying at 36. That's because it's not a straight out offer, and neither is it a big surprise. Like everyone knows about it, so it's all good. It's good, but we'll take a look at it. Okay. Any other stock? Any other stock?
I have NetEase, Frank.
Hold on one second. take a look at YY. My good friend Zeta just asked me. YY is fine, but Chinese stocks have been really wacky lately. Okay, so technically speaking, this is the daily chart. This is good. It's fine. Stochastics, looking at simple stuff. Volume's been uh, um, uh, uh, more on the lightish side. It needs to be higher than average, which is roughly, it should be more like in the 3.1 million shares daily. This reversal are very sudden. I hate these ones. They just come from nowhere. If you're positioned here right, then you got those nice couple of points, but then bang, it pulls down. So on the daily, you got a move here on YY. What does YY stand for anyway? I always need YY. What a great name. Where do you work? I work for YY. Okay, that's great. So anyway, all kidding aside. So 110.22, so you got a 3-point mover here. Not worth the risk for me. If I see a major candle development that takes out the 111, 1 second, I'll tell you exactly. If it takes a big fat candle development like that, okay, that means real money's getting in. The shorts are getting squeezed. I don't know what the short position in YY is. I don't think it's heavily shorted. But if we break out over 111, let's say, or if we are breaking out over 110, I will be a buyer. At that point, the stock will hit 113 to 115. You got to be very fast on these things because these things reverse very quickly. So again, we're all risk traders. We're options traders. I understand risk more than anybody else. At this point, it is not a very convincing buy on my part. But then, what the heck do I know? NetEase woke up. By the time Trent started talking about it, it was up 11. Then it came down to 7. Now this, ladies and gentlemen, is a screaming buy, in my opinion. Okay?
But
Let me finish, please. Okay, I know. Let me finish. So, and then it can pull back a little bit. The 3, 4, 5 points that it pulls back means nothing as long as the candle, or at least half of the candle, over 335 is intact. The stock will hit the upper end of the scale, which is 356. Nick, your turn. What were you
no,
asking?
I wanted to see this today because I actually bought this today.
Excellent. So, did you buy which options or stock? Did you bought the stock and the options, or you just bought the options?
No,
right?
I just bought the options today, and
Which one did you buy?
I actually got the weekly, the 350 weekly.
I think you're going to be fine. I will join you tomorrow, depending on how it opens up. But this looks pretty damn good. What was the reason why NetEase went up? Because I was so busy with all the other stuff, I didn't even know. Does anyone know? I'm looking it up right now. Because the stock doesn't move like that unless there's something going on. Let me see. Valentine's Day is the next earnings release for NetEase. This is a serious company. Oh, Trent did put it there. Some Qualcomm chip collaboration, right? Trent?
Yes, sir. Yes, sir.
Okay, I got to look into that. That's awesome because obviously that was big news. The Qualcomm chip collaboration, and let me see here. Wow, on briefing, which I primarily follow, and they're very detailed and accurate, there was not a single piece of news on NetEase. This is a good sign, you know? So bottom line is, this is a better technical chart, both, and again, Nick here bought today's 350, which is, I think, good to go. We are looking at, let's do this, so you know. These have very specific buy and sell zones or supply and demand points. So this was obviously the point of, the point where it was extend to the left there. Okay, so this was your previous breakout. You see that big fat bullish engulfing breadth thrust candle. So that was exactly where it tested, 312. And then since last Wednesday, it's up to 343. Oof. You got a room here to move up to 355. You're good to go. You're good to go. The stochastics are showing no signs of any weakness. They're moving sideways to higher, over 80. Good to go. Volume is positive overall throughout the day. Pretty heavy. So this is in play. You did the right thing, and we shall go ahead and put some nice, powerful alerts on this tomorrow. The 350s are roughly the cost what? Before I look it up.
It was like 420 thereabout
Sounds good.
when
So
I got into it today. Yeah.
sounds good. So they're not outrageously priced. Everything here technically is a go to 355. Okay, next one.
Frank, it's Tom.
Yes, sir. Go ahead.
ISRG. I was looking to start watching for a bounce off 365 with the double bottom
Wow.
on stochastics
I
and the MACD dipping.
Yeah, I haven't seen ISRG in so long. You know, wow. ISRG daily looks like crap. Okay, this looks like complete garbage on the daily. Daily is showing me 365 as a major buy zone, 365 to 368. The daily
Right.
is heavy. Just giving you the basic pointers here. This broke the 50. Remember, ISRG is a very powerful stock. When it breaks the 50, a lot of fund managers who are long ISRG are out the door. See you later. We are coming into the year end. This most probably is going to be a candidate for major tax loss selling, given the fact that the big drop back in the first part of December, for whatever reason it happened, I don't know. Okay, was not a good thing. So at this point, it is, in my opinion, money could be better spent elsewhere because you're going to be dealing with. We're looking at a short term 1 hour, 2 in a second. Unless you're quick enough, and unless we get a big, fat, bullish engulfing bar over the 50, which is 376, and then moving towards the 385 level, then the tide will not turn, and more importantly, there will be hedge funds slamming it on the bid as it's moving higher. So be careful on that. You've got big sell volume here, which can be looked on as two things: capitulation, which is a good thing, or the start of another big selling, which I'd be more interested in the stock at around the 365 to 368 level.
Right.
Looking
Yeah, 365 was what I was looking for.
Oh, 360, what you're looking for. Okay. Looking at this one here, very mechanical stock. Wednesday, it opened up at 369 and shot up to 389. This is, like I said, this is another like NetEase, YY type of mover, right? They move 10, 20 points. It's very uncorrelated with the market. Nothing to do with that. Glad you brought to my attention. I will keep an eye on this tomorrow. But like I said, options are quite expensive on ISRG, yes or no?
Oh, yeah.
Why waste money?
Yeah.
Why waste money? I have a very simple philosophy. This is the time of the year where things get pretty volatile, right? With an uptrend in place. Why put so much money into when you can't even buy size? Why not buy the Nvidias, the Rokus, the Riots, the OSTK, where you pay basically $1, $2, $3 an option? That's my theory. It's a simple one. If you can't buy a reasonable size, what does it matter if you just buy one or two? Unless the stock makes a $20, $30 move, you're making nothing. In my opinion, straight out, I wouldn't bother. Unless I see a definitive change and a 3 or 2 day. ISRG, you make the most money on roughly a 24 to 48 hour run up. It has to be at least 40 points. So if I'm going to do that, then I'll be looking at some of the big behemoths like Priceline or Tesla. Okay, so let's look at Tesla. Tesla's going to Mars. You know why? Because Trump wants to go to Mars. Did anyone catch that? He actually said, we want to put the American flag on Mars. Seriously, I even posted that. Do you know what that means? Who are the biggest players to get to Mars?
Boeing and Tesla.
That's it. Boeing and Tesla. Boeing CEO says, we're going to plant the first flag. That's healthy American competition. Love it. And Elon Musk said, okay, we're already there. He's probably got his summer house on Mars anyway, stacked with the nice wine bar and everything. This is serious stuff, guys. And Tesla technically is breakout. That's it. It's a breakout. Now, the breakout is not endless. That's why we have these charts. And anybody who's not trading the stock, I don't know what they're doing. Seriously, you want to respect the technicals, forget the name. Options are cheap and they move. So this is what I'm looking at. It's real simple. And I have multiple charts on trading Tesla, as you guys know. So let's get this out. 1 second. And the guys who are trading this, they're doing very well. Is it volatile? Yes. Is it a technical setup which says higher? Very much yes. Which I've been calling for the last couple of days. I stay quiet on Tesla if I don't see a technical setup. I go real vocal and posting alerts when I see it moving. That's my job. Your job is to not sit there. So, here's your trading band. Your lower end of your trading band are each of these lines. Let's get this in here. There we go. Let's extend this to the left. So you have some sort of reference point here. Come on, baby. Okay, so there you go. Okay, everyone see this clearly? This is money in your pocket. What I'm explaining, what I have explained, and I'm explaining again on Tesla. Here's a major downtrend line. A stock like Tesla breaking a major downtrend line and recapturing what? Recapturing what, guys? Fill in the blanks, somebody.
The head and shoulders.
Oh, cut it out.
The neckline. The neckline.
Recapturing.
The 50.
Thank you. Who said that?
Dano.
Yeah, Dan was like sitting there having his cigar and stuff. Oh yeah, just a 50. Just took out the 50. You sound like a freaking actor, like one of the Gambino family. Oh, you just took out the 50.
Just so proud.
Yeah, it's like it just took out the 50. Come on, boys, let's go take care of business. You know, he just took out the 50. I love it the way you said it. Okay, yeah, he just freaking took out the 50. That's all you need to know, guys. Smell the coffee. And correctly or the other patterns that you're talking about. Okay, I think Trent mentioned that. So this is basically a massive W pattern. And as Mr. Gambino, aka Dano, likes to say, it just took out the 50. All right, so there you go. So if it takes out the 50, where is it going to go? It is going to basically go to two places. And this is where it's going to go. Number one, it's going to go to this lovely line, which is the first. It's over the neckline right now. Remember, this is the neckline. This is a very defined chart. And the reason being, a lot of hedge funds trade Tesla. So, there. Okay. So here's a neckline. It took out the neckline. The neckline was taken out at 326.64. Completion of this first pattern, of the first W pattern, arrives at 332. So you can be sitting around like, knitting a sweater. It gets that 332 level, you're going to take down some nice profits if you're long, or you're not going to rush in to buy it at that level. That's stupid. 332, 333. Now I've mentioned this on my other comments and my other Tesla charts that I've shown. Looking at the size of this candle and the fact that Donald wants to go spend his summer in Mars with Elon Musk and SpaceX, all right, it is possible that after a minor consolidation at the 333 level, which means a pullback of 3 or 4 points, once it hits this level, let's say it comes down to 328 again, it's a very good chance that Tesla hits this lovely magenta line known as the 150-day moving average, used by multiple powerful hedge funds as a sign of vitality. Okay? As a sign of, like Kramer when he screams like a monkey, bye, 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 bye. Because once you cross the 150-day SMA, guys, there is no stopping. There were 4 days of incessant selling initially. There will be 4 days of incessant, rapid buying, which will take the stock to completion of 360 and this large W formation. End of story. So you need to be positioned earlier. The volume speaks volumes. That's short squeeze and new buyers, and probably some Martian investors from Mars. Okay, all kidding aside, that's heavy. Almost 8 million shares. Let's take a look at the internal. No complaints there. Screaming higher, starting to curve and moving higher. Remember, internals do not get overbought, full stochastics, unless both the percentage D and K, let's call it the white line and this, beige line, both start to go over the 80, and the percentage K needs to go like this. That means we still got room to move. So even if it gets rejected at the 339 level, you got 11 points from here. I'm sorry, 10 points from here. And you got 4 points to this level. Did everyone, this is like as clear as I made it out to be. And God help us if it goes over the 150. Because it is going to go hit this level fast. And we've done this before. We have done this before. Now, what we have also done, myself included, much less than many of you, is sell early. Nothing is more painful as a trader to know that the charts are screaming it's going there, but you still sell early and not leave anything out there. And it gets there. I don't need to ask people, trust me, it happens. Well, let's stop it from happening again. This level here is known as what? Mr. Gambino, you probably know that answer, Dano. What is this level?
The bear kills them.
The bear kill zone. All right. This is where the bears go to get shot. Because they keep on saying, no, it's a crap. They're running out of money. Their Model 3 is actually a Model 1. It doesn't move. It doesn't have wheels. All that garbage. They bring in Bill Lutz or whatever his name is, former chairman of GM, who's the ultimate. You guys seen him, right? When he talks about Tesla. Oh, yes, Tesla. This company, it's completely on hot air. GM's got much better car. It's called the Volt. Okay. Very exciting. He's such a hater of Tesla. They always bring him when Tesla's down 10 points. I'm serious. Bob Lutz. Every time he's talking like that, buy the crap out of the stock. Okay? Because he's unbelievably pathetic. So this is the bear kill zone. Now, what traders, are you waiting around for the bear kill zone? I'm not. I'm just going to play this zone here. And I'm going to keep on sticking to my charts. So, on that note, I shall bid good night. But I have a big announcement, which I'm going to formalize and then present early next week on the Bitcoin service that I'm going to launch. Okay? This is not going to be an active, 5-minute trading type of service. This is for serious people who want to trade Bitcoin options and possibly futures when the futures are formalized. They just started trading. Or the straight coin. Now you don't need to trade one Bitcoin, which is freaking $17,000. You can trade, $1,000. But I will put the most tactical, precise charts on Bitcoin, Litecoin, and Ethereum at intervals, multi-day period, or intraday. And people who want to learn everything about that whole sector, which is just starting. I don't mean price-wise necessarily. I mean that whole sector, believe me, is now legalized. It is legalized. The big money is going to flow into this sector on the Bitcoin side. And the symbol here is what was the symbol? XBT. Okay, on Thinkorswim. When the big money comes in, there will be at least, this time next year, there'll be at least more than 100 or at least 50 to 100 exchange traded funds involved in cryptocurrencies. I can assure you that. All right? CME doesn't get into Bitcoin and other banks looking to open up their own vehicles on Bitcoin unless they know there's money to be made. And very simple theory, guys. Money's only made where money is going in. They're not getting into a sector which is going to be a one-way drop into the abyss. On that note, stay tuned. And anyone who's and it's not that hard trading those stuff. Okay, I'll be more than happy provide all the information once I formalize it over the weekend, and we're going to be good to go. Have a great weekend. God bless you all. See you guys tomorrow morning.